Goldman Sachs says it plans to close its operations in Russia, which marks the first major Wall Street bank to leave in response to Russia's invasion of Ukraine. For more on this scoop, let's welcome Bloomberg's Wall Street reporter, Sonali Basak. So it's interesting that they've taken so long. The goods manufacturers, drinks and food, they came out first. It's taken a while for services players to get out.
One thing that's interesting that my sources tell me is that all the banks are talking to regulators daily at the moment to figure out how to untangle from not just sanctioned entities, but if they were to do a more wholesale removal like this, how to do so. Remember, we're talking about the global financial system here. There's a lot of exposure, not just to the banks, but their counterparties and the funds themselves. Now, let's talk about Goldman, because Goldman's exposure is fairly limited. It's about 80 employees, some of which are Russian nationals, some of them are not, and then are moving to Dubai. But remember, Goldman is one of a few firms that in the 90s really pushed into Russia. JP Morgan was one of the first to really forge into bond deals in Russia. We have not heard from JP Morgan yet. Their silence is pretty loud. We don't know their full exposure, like we do with Goldman, which is only about $700 million. At Citigroup, that's about $10 billion of total exposure. We know why Citigroup can't fully untangle. They're trying to sell some assets, and some of the people that would buy those assets would have been potentially sanctioned entities. So it's a little bit complicated for some of these firms to unravel their ties, but of course, this is definitely a first large move.
All right, so maybe we see others. It's going to take time, is what I'm hearing from you. In terms of exposure, there was a story on Pimco, I think it was broken last night or this morning, that they have $1 billion in exposure in terms of credit default swaps that they've sold, and they also have exposure in terms of the fact that they're long bonds.
Yeah, that's very important because remember, a lot of people are looking at what would happen next week if Russia does not pay back its dollar-denominated debts. What if they default on the dollar-denominated bonds? So we have Pimco that has massive exposure to the sovereign debt, but then also to the CDS, which they've sold, which means they would lose a lot of money should they have to pay creditors. Now,
if they pay rubles, if they pay that in rubles, the question is that a default?
Is that a default? And how much, who bears the losses at the end of the day? Pimco is a $2.2 trillion asset manager. So in total, this is
a drop in the bucket.
Yes,
for them.
But it is a large amount. And when you look at who holds not just Russian sovereign debt, but the many, many, many corporates as well, which have CDS trading as though they are going to default. It's very crazy how much spreads have really blown out. Then you think about Pimco and then all the emerging bond funds that have an even greater percentage of exposure. Very interestingly, I mean, the reason Pimco is so interesting is because we're talking about the Dan Ivascyn Income Fund, where even emerging markets is one part of a fund that is everything from investment grade to treasuries to high yield. So, the average person, the everyday person has more exposure to
That's
Russia.
An inside joke between me and Sonali. In terms of a default, Fitch downgraded and warned. We're all kind of watching for that. I saw Tracy Alloway tweeted that, the sovereign bonds are showing that concern, but corporates not so much.
It's interesting because you have Gazprom and Rosneft that have paid back or said they would pay back. I'm stealing so much from BI's Damian Sassower today. He's brilliant on this. We both looked up where these entities were domiciled, and it is Luxembourg, it is Ireland, it is not in Russia. So in theory, those assets could have been seized if they didn't pay back creditors to begin with. One more thing about this that I think is really important, going back to Goldman, is what they said about what they would do in their role as a market maker. Because even though they're exiting Russia, they have to make markets for their corporate clients that are trading corporate bonds. They said that they're helping their clients reduce risk in Russian securities, but not seeking to speculate. So I think that's a really important thing that we're not hearing unanimity from all of Wall Street.